Good evening, ladies and gentlemen. Thank you for joining us today for a webinar on the topic Standards on Internal Audit, Keeping Pace with Reforms, hosted by the Sonipat branch of NIRC under the aegis of the Internal Audit Standards Board of ICAI. I'm a firm believer in prevention over cure, and internal audit is one such practice that follows this principle. Internal audit can help organizations preserve and add value to their existence, for it is a forward-looking activity and aims to check all that could go wrong. Today, we have among us two very learned and seasoned experts in the field of risk management and internal audit, who will share their knowledge and expertise in these domains. I would like to thank CA Charanjot Singh Nanda ji, Chairman, Internal Audit Standards Board, CA Gyan Chand Mishra ji, Vice Chairman, and the entire team of the Internal Audit Standards Board for their persistent efforts in bringing professional updates to our doorstep. Thank you. I would now like to request CA Amit Kumar ji, Chairman, Sonipat branch of NIRC, to take over for his opening address.
Thank you, Ronji. First of all, I would like to say very good evening to everyone. I, CA Amit Kumar, Chairman of Sonipat branch of NIRC of ICAI. First of all, I would like to thank you, CA Nanda sir, Central Council member and also Chairman of IASB, and Gyan Chandar Mishra ji, Central Council member and Vice Chairman of IASB in his absentia, for organizing important VCM on standards of internal audit, which is much relevant in today's scenario, and given us opportunity to host this program. We have eminent speakers Sri VS Sharma ji and CA Sarad Acharya ji, who have tons of experience and knowledge and ready to impart their knowledge with all of us. The standard of internal audit establish uniform evaluation criteria, methods, processes, and practices. These standards are pronouncements which form the basis for conducting all internal audit activity and help the internal auditor to discharge its responsibility. IASB committee doing wonderful job by conducting regular programs on important topics in the era of internal audits under the chairmanship of CA Nanda sir, and also invite our branch in the past also. I would like to welcome everyone for joining today VCM. So without taking too much time, I would like to hand over the dice to CA Rohan ji to take this VCM forward. Thank you, Rohan ji.
Today, we are privileged to have the company of Mr. Charanjot Singh Nanda, who is the Central Council member and the Chairman of the Internal Audit Standards Board. Thank you, sir, for taking time out of your busy schedule for this webinar. Mr. Nanda is a true leader and a mentor to many students and members alike. He has worn many hats as a council member over the last 2 decades and is an inspiration to the entire community. Over the years, he has been the member of Quality Review Board, and currently he is also the Vice Chairman of the Banking, Financial Services and Insurance Committee and Chairman of the Digital Accounting and Assurance Board. He was a Chairman of the Committee on Internal Audit and Committee for Members in Industry. And previously, he has held many positions as a Central Council member. Thank you, sir. I once again would like to thank you for your valuable time, and I would like to invite you for your opening address.
Thank you, Mr. Mehrotra. It was really nice that you agreed to moderate this session. So one of the authorities on standards on internal audit, CA, Shri VS Sharma ji, my very old friend, the Chairman of Sonipat branch, CA Amit Gupta, the Intra-Audit Standard Board, all officials, Aarti, Arun, I asked the person for technical support and all. Ladies and gentlemen, let me very candidly accept one thing, that your board is totally inclined to give best of the technical programs to you, and you are back yet with another exciting program on standards on internal audit. Your institute is very keen that these standards be ultimately referred to MC and they may be mandatory, so that the internal audit profession gains immensely and tremendously from these standards. I have to give my keynote address. Give me a second so that I'm able to put across my PPT. Hold for a second, please. Rohan, you are able to see my PPT?
Yeah.
Yes, sir.
Yeah. We'll start, ladies and gentlemen. Today's coverage will be on 100 series, which are standards on key concepts. SIA 110, which is nature of assurance. SIA 120, which is internal controls. 200 series, standard on internal audit management. SIA 210, managing the internal audit function. SIA 220, conducting overall internal audit planning, which is very pertinent. SIA 230, objectives of internal audit, and SIA 240, using the work of an expert when you are able to effectively rely on his reports. 300 internal audit assignment. There's a saying which says people never fail, never plan to fail. They generally fail to plan. So planning is very, very important. SIA 320, internal audit evidence, which is again very pertinent. SIA 330, internal audit documentation. SIA 350, a review and supervision of audit assignments. SIA 360, communication with management. SIA 370, reporting the results of the audit. SIA 390, monitoring and reporting of prior audit issues so that they are not impeded in working. So now 100 series standards on key concepts. SIA 110, nature of assurance. Please understand, the standard is there to provide proper clarity on number one, whether the internal audit is capable to provide opinion and assurance. What are the essential requirements which may be satisfied to be able to provide the assignment assurance, and the nature of assurance that can be provided and under what circumstances. If I'm not given proper documentation and I'm doing an internal audit, I need not give a reasonable assurance. I can always give a limited assurance. And let me tell you, 110 is one of its kind in this entire world. It was there in the entire universe, and your institute, the Institute of Chartered Accountants of India, thought it fit where the assurance can be based on the inputs which you get from the client. Second, 120, internal controls. Now, what is the purpose of internal controls? Provide a common terminology on internal controls to prevent ambiguity or confusion on the subject matter. We have to be very clear on certain things. You have to define the internal controls and emphasize how they mitigate risk and also how they can be viewed from a legal perspective. You need to explain the responsibilities of management and auditors with regard to internal controls, and very importantly, specify certain requirements which need to be met to be able to provide an independent assurance and internal control. That is very, very important. You have to have an independent assurance which you derive from various facets in the entire process. 200 series, standard on internal audit management. Now, what does SIA 210 say? Managing the internal audit function. Now, this standard primarily deals with the responsibility of CIA, Chief Internal Audit, or the person of his designation, to coordinate and manage the overall performance of activities related to internal audit. He is the one point with whom every decision is being taken, everything is discussed, and all inputs is being received. This SIA ensures that overall objectives of internal audit has to be achieved. You need to have skilled people who are undertaking this assignment. You need to work in a very systematic, disciplined, and professional manner. And the quality of work is very important because that forms a basis for reporting and is supported by evidence and documentation so that there is no issue. The last is work is conducted in conformance with the standard on SIA and other related pronouncements issued by ICI. Now I come on standard 230, objectives of internal audit. Why do you need internal audit? What are the objectives? The objective is to give a clear-cut assurance to the management, the stakeholders. You see, internal audit essentially is a management function. So there you are reporting the things either to the audit committee or to the board or to the client or stakeholders. So your working has to be very immensely supported by all issues, all processes and evidences so that you're able to emphasize on what you intend to bring home. Standard on Internal Audit 240 using the work of an expert. Now, what does this standard do? This standard applies to all internal audit assignments where a part of the assignment is undertaken by expert. And that work, how much reliance and what are the basis of reliance on which the internal auditor can exercise to provide an independent assurance. 300 to 400 series, standard on internal audit, SIA 310, planning the internal audit assignment. I told you, planning is very important. So the various facets, how it has to be planned and how it has to be taken on. I'm rushing because there's not much time. I want to listen to Mr. V.S. Sharma. Standards on internal audit, SIA 320, internal audit evidence. Now, what is internal audit evidence and what does this standard bring home? The standard intends to explain certain requirements where in process of correction, retention, and subsequent review of internal audit evidence. The standard puts you at a parallel when you start understanding the nature of evidence. You start understanding the reliability and consistency of evidence, evidence collection and recording process, and more importantly, documents so that when the evidence is to be emphasized, you have the document in place. Gathering appropriate and reliable audit evidence. You have to confirm the nature, timing, and sufficiency of audit procedures, aid in the supervision and review of the internal audit work, establish that the work performed is in conformation with the applicable pronouncement of the Institute of Chartered Accountants of India, which is very important because we chartered accountants are governed by the Institute of Chartered Accountants of India. Standard on internal audit 330, internal audit documentation. Now, what is the nature of documentation? You have to look at the documentation. The content and sufficiency document doesn't mean a single document. Document essentially means how you can use the entire system to create value. What is the process of documentation? How you take care of timely completion of documents, and what is the confirmation of compliance by the client, the auditee, so that everything is in line with the systems. SIA 350, review and supervision of audit assignments. What you have to do? You have to confirm and update the audit assignment plan, including the planned audit procedures and adequacy of the audit resources allocated. You have to evaluate the audit procedures undertaken, evidence collected, proper documentation and conclusions drawn by the audit staff. The conclusion is a very important area because conclusion ultimately is the basis for the report which is being published by the internal auditor. And it's also SIA 350 explains you how to formulate the audit observation and draft the internal audit report. Now, review and supervision of audit assignments. You are aware that the CI, Chief Internal Auditor, or the engagement partner, if it is a partner firm, has the overall responsibility of review and supervision of the nature, timing, and extent of all internal audit activities and testing procedures, and to ensure that evidence is collected is sufficient and reliable. Now, what does this standard do? It provides guidance on nature of review and supervision. What level of review is there and how the work is being supervised. Review and supervision of audit procedures and documentation. And last very important facet is documentation. SIA 360, communication with management. I'll try to emphasize a bit here. This standard explains what is the communication process and protocol, how you explain things to the management, what is the protocol, what is the level at which you need to escalate, and what are the areas where you have to sensitize things, because ultimately it becomes your earnest duty to give proper information so that the board or the audit committee is able to take informed decisions. Modes and channels of documentation, very, very important. What are the modes and channels which you can use? Periodicity and timeline of communication. How often can you communicate to them and take their feedback? Essential information for communication. It has to be a very executive summary which has to go to the top people so they're able to effectively react and ensure that things are in the right order. And last, again, as usual, is documentation, which is very, very important. Issuing internal audit reports. Now we come up to the conclusion. Once you have done everything, you have to issue the audit report. You have to share with the audit details of all significant findings. Very, very important. Allow the management to understand the issue and take corrective actions and provide a sound basis for any insurance being provided by the internal auditor. Very simple way, share, allow, and provide so that a holistic view is being percolated to the management. SIA 370 reporting results. This standard provides guidance on basis of internal audit report, which has to be conducted in accordance with SIAs. Content and format of internal audit report is again very important. What are the areas where emphasis has to be laid, and what are the areas which needs to be percolated over to all levels so that people are able to effectively, all stakeholders are able to effectively take benefit of the audit, and documentation is the last. Standard on internal audit SIA 393, monitoring and reporting of prior audit issues. Now, monitoring of prior issues. When you step into the shoes of another auditor, you want to, or if you're even doing it for the first time, I'm sorry, you need to monitor the prior issues, closure of prior issues. You can't carry them further. Action taken reports, how they are to be concluded. That is very important. Escalation process. There are certain issues where escalation is required, and therefore that process has to be laid down. Documentation of each and everything. So, ladies and gentlemen, I'm thankful to the board for giving me the opportunity. I have tried to bring a large subject in a very short time, but we have Shri VGVS Sharma, master of the subject. He will take you through the intricacies. Please understand, if you understand the standards, you are the best to perform. The most important and pertinent thing is to assimilate them and use them in your professional assignments, because the institute, which is spending a lot of time, lot of energy to have standards for its members, is totally directed to hone your technical skills and, more importantly, give opportunity to you to add value to the client's initiatives. Thank you. Thank you so much. Over to Mr. Malhotra for his further proceedings. Thank you,
Thank you, sir. Thank you for your valuable insights, sir. So we move forward with our first session that will be on the 200 series of standards and 300 and 400 series. Our first speaker for the day is Shri VGVS Sharma ji. VGVS, as he is generally called, is a retired BCom honors CMA professional with more than 34 years of industry experience, with expertise in governance, enterprise risk, compliance, forensic, and business process consulting domains. He has industrial experience spanning the Big Four and manufacturing, telecom, IT, retail, and travel industries with wide international experience. Some of the key organizations that he has served include Tata, Godrej, GE, Escotel, Aircel, Deloitte, etc. A passionate speaker at various forums on wide-ranging topics like internal audit, enterprise risk, and forensics. And currently, he's running his own management consultancy firm. Thank you, sir. I would like to invite you to start with your session.
Thank you so much, everyone. Thanks, Nandaji, for the opportunity given. Having a bit of a problem with the with the technical, so just give me a moment, please. I'm sorry about this. So can I join back again? Seems to be some kind of a problem.
I think you can do that, sir.
Sorry about this. Yeah, I'll just
no problem, sir. Please.
Hello. Are you able to see the screen?
Yes, sir. Yes.
Okay. Are you able to see now?
Yes, sir. Yes.
Oh, thanks so much. Sorry for the faux pas. Thank you so much to ICAI. Thanks to Nandaji for that excellent opening meeting. My sincere apologies for this technical faux pas, but I'll try to quickly make up for the lost time. In fact, Nandaji has made my job much more easier because he touched upon all the key aspects. I cannot say how important the role of internal auditor has become in recent times. When you look at some of these fraud incidents which have happened, and when you look at some of the investigations which have happened, you would see the first person that they go to is an internal auditor as to how they have failed to pick up some of these warning signs or signals. And therefore, it becomes all the more important, as Nandaji rightly explained, how important it is for us to adopt a robust internal practice or a process, and also maintain adequate documentation to be able to prove that we have done a good job in so far as conducting or scoping an audit area is concerned. So as Nandaji explained, we're going to touch upon 200 and the 300, 400 series. So which broadly talks about the internal audit planning process, both at the annual level and at the engagement level. So we'll quickly jump on to the standard, the first standard in the 200 series, which is 210, which talks about managing the audit function. So what it talks about is that when you become the head of internal audit, what are the few things that you need to look at in managing this function, and what are the key things that you need to look at, and what are the fundamental objectives? And this is again not very exhaustive. This is broadly, it explains to you what is it that the key objective is of managing the function. You need to have adequate skills, you need to have adequate resources, you need to have a very well defined audit process, either by way of a methodology or by way of a process document, which you will adopt, and which should be benchmarked with some global practices. And CIA has done a fantastic, the Institute of Chartered Accountants have done a fantastic job in filling up that space by bringing out standards. And therefore, you can actually benchmark your internal processes, audit processes, with some of these standards which have been defined by the institute. And then you need to also have adequate process to be able to collate the requisite evidences and then report your findings. And most of the findings are subjective in nature and are judgmental in nature. Therefore, it becomes all the more important that your documentation process is very, very strong and sound to be able to justify the conclusions that have been drawn by the audit function. And then lastly, it should confirm with the standards. And why is it important to have certain standards or uniform processes? Because when you actually going for a quality assessment, when the assessor picks up randomly certain audits, the methodology and the approach that has been adopted by various teams within the function should exactly be the same. And therefore, what it means, it's something like your ISO or TQM kind of a thing, total quality management in the manufacturing function, that once your processes are robust, the output can be relied upon. So that's the kind of a theme with which the standards have been brought out. Now let us look at what are the key requirements to meet the objectives that we just talked about. You need to have a very well-defined and documented internal audit process. Not only being documented, you need to make sure that every team member goes through this manual, internal audit manual, understand the process, understand the documentation requirements. It talks about a lot of things in terms of nature of evidences that you gather, how do you document it, how do you archive it, how do you then work with documentation referencing, very similar to the external audit. But then what happens is that the evidences should be able to speak for themselves. So when somebody reviews it, the evidences should be able to speak for themselves with regards to the conclusions or the audit findings. Resource planning is extremely important. So when you run the audit function, and when you prepare an annual audit plan, you need to be able to identify who are the people that you're going to assign to the engagement, whether you need subject matter experts, whether you have adequate skills. Now, whether you want to in-source, co-source, outsource, those are the kind of strategies that you need to build in, and which plays a key role when you prepare the implemented budget, the annual budget that you present to the audit committee and to the CFO or the CEO. You need to have a very strong review and monitoring mechanism, because whenever an audit is performed, you need to have checks and balances in place to be able to internally question ourselves. When I say ourselves, the internal audit function and the team, internal audit team itself, in terms of, are we on the right path? Are we satisfied with the nature of findings or with the nature of evidences? Is our approach right? Are we using the technology accurately? Are there any dark spots? Are there any scope limitations? Which is extremely important. Most times, what happens is that either due to a lack of expertise or lack of resources or lack of support, you may not be able to perform a certain. You may not be able to audit a particular area. Or for a particular period, and therefore you need to call out very clearly the scope limitation in your report. Quality evaluation improvement plan should always be part and parcel of your audit function, which means you need to constantly improve and make sure that your processes are world class, and then you benchmark yourself with some of the best in the industry and in the world. And therefore, some of these standards which have been defined by the Institute comes in extremely handy, because a lot of work has gone behind drafting these standards to make sure that we adopt some of the best practices worldwide. Work paper documentation is something that we have just spoken about, and I cannot explain to you how critical and important this is whenever you have management discussions or with the auditee. When you close an audit finding, the evidences that you present, the quality of evidences that you present to the management and to the auditee becomes absolutely important. Now, this is a slide. Now, we just moved on to the next standard, which is 220. I'm running a little fast due to the paucity of time, but I'll be happy to take all questions either at the end of the sessions, or you can write to me and I'll be more than happy to respond. Now this is this standard deals with the annual audit planning process. Now, who is responsible for the audit? Now, when you step back a bit, now the directors are directly responsible in managing the affairs of the company, because they have been given that authority by the shareholders. And now, what do they do? One of the functions, which assists them in ensuring that internal controls are designed effectively and are working effectively, is the audit function, which functionally reports directly to them, and therefore they need to work very closely with the internal audit head and the internal audit team to define the scope. What areas need to be covered? So that has to be carried out by the internal audit function and then presented to the audit committee. Next is the periodicity. Now, whether you want to present the report every quarter to them, or whether you want to do it on a need basis, each board follows its own process. The methodology, what is the kind of a methodology that we have adopted? Have we benchmarked our internal audit practices and processes with any established framework? So that's what most audit committees are concerned. So that actually gives them the comfort that the report which actually comes out or which gets presented to them is reliable. So, and basis this, the overall audit plan is developed. Now, what is the primary objective? So, to ensure that the audit plan meets the organizational objectives. So, typically, what we do when we do the annual audit plan, we ask for the budgets, annual budgets for the particular year, and even for if you have a rolling forecast for 5 years or 10 years, we also call for it. This becomes extremely important to understand what are the focus areas of the organization. What is it that the organization is trying to do? Is it trying to focus on increasing certain revenue lines, or cutting down on certain cost parameters, or wanting to get into new geographies or new products? What is the strategy of the organization, and where is it that you need to focus? Then comes your risk assessment process, which is more on your internal processes. What is it that you need to focus on? Because your laundry list is so very large, but your resources are limited. Now, you do not have time and effort to be able to spend time on each and every process to be able to provide an assurance. It's more a Pareto kind of a principle where you spend 20% of the effort on 80% of coverage, so that it gives you a very, very high degree of comfort to the audit committee and to the management. That's why we say reasonable assurance. We are not saying absolute assurance, but reasonable assurance that things are either fine or not fine, or areas that require significant improvement, right? So that becomes extremely important. Then comes the broad scope is extremely important. Once you have identified the auditable areas, next comes what is it that you're going to look at in that particular area. In the procurement, what is it you're going to look at procurement? Are you looking at the sourcing strategy? Are you looking at vendor shortlisting or negotiation? What is it that you're trying to look at? That becomes extremely important at a very, very high level, that which you would sharpen it when you perform the engagement. And the coverage, it becomes extremely important. Are you looking at a particular year, or you're looking at a particular geography, or a particular division? What is it that you want to look at? And then comes your resource planning. Now, how do you want to ensure that you carry out these audits? Now, whether you want to outsource, insource, co-source, what is the kind of a strategy that you have adopted, and whether you have done adequate planning? Because most of the organizations or functions are hit by attrition. So how are you going to manage your attrition? What fallback options do you have? It becomes extremely important, because these are the questions that audit companies keep asking, because the audit plan is important and they want to make sure that you complete your coverage within the specified time. For example, you have certain audits that you need to complete during the first quarter. They are extremely keen that you have the capability to be able to complete on those audits and report in the first quarter. So in case if there is any delay, or you foresee any delay, they would get very worried, and they need to listen to your plan B in terms of how are you going to mitigate that risk. So it becomes extremely important. Now, this becomes the key activity when you perform an annual audit plan. The last one, of course, is that it gives the comfort to the audit committee and to the management that okay, you have benchmarked your internal processes with certain standards or framework, and that's where when you mention that okay, you have whatever internal processes or the methodologies that you have developed and implemented comply to these standards. It gives them that much more comfort, and becomes much more easier when you go for a quality assessment of the function. Okay, let's quickly look at, okay, these are the key requirements. Now, professional judgment is extremely important. I did mention that, there are no binary rules. There's nothing called as right or wrong. You would have plenty of shades of gray, and some of the decisions that you take are subjective, but based on informed decisions. When I say informed decisions, it's based on the evidences that you gather. Now, evidences could be in multiple forms. We'll touch upon it in the subsequent slide. And you need to have a thorough understanding of the business. This is something which is at most is so very critical to the success of the audit function. Without understanding the business, what does my business do? What are the areas in which I work? What are the key areas of revenue? Where do I spend my money? How do I run my business? What are my operating plans? If I do not really understand the kind of business that I am in, I would never be able to understand the kind of risks, both internal and external risks, that the organizations are subjected to. So it becomes extremely important to understand your business, your various divisions of business before you actually start working on your audit plan. What are the key areas that we need to focus? Without understanding the business, you would never ever be able to do it. What are the key 10 things that you want to look at? So it becomes so very important. Now comes, what are the various drivers that you refer to when you prepare the annual audit plan? Typically, we discuss with the external auditors. We look at some of the audit partners with whom we work. For example, if there's a co-sourcing or an outsourcing arrangement, you would work with some of the subject matter experts that you would have engaged. You would like to discuss with them that this is the plan, this is the broad scope I'm looking at. Are there any new threats that you have come across in the industry, either within the peer industry or maybe in different industry? but then areas that definitely need to be looked into. Then comes, of course, the audit committee. In the end, when you present to the audit committee, the management becomes extremely critical. Some of the key individuals in the management, you run the audit plan, the draft plan, and tell them, okay, this is what you are looking at, and these are the reasons why you feel these are the areas that they need to be covered as part of the audit plan. Now, how they align with the business objectives, and then your risk assessment results, and then you engage with the management and get their feedback and inputs and make those corrections or changes. Most times they would say that, okay, instead of quarter 2, why don't you cover it in Q1? In the first quarter, or maybe in the fourth quarter, because some changes are happening in that particular area. So these inputs are very, very valuable. Otherwise, your audit itself will become will not have its relevance, I would say. Now comes the, once you prepare all of this, you would have the entire audit universe. What are the things that you should be covering for the entire, and we call it broadly as the annual audit plan. Now, again, this is not cast in stone. Most of the audit plans are rolling audit plans, which means that every quarter you come back and relook at these plans and to check its relevance, to see that whether the plan that I have drafted at the beginning of the year, is it still relevant today, or have new risks emanated? Did the existing risks got mitigated, or they got downgraded? Now, so you need to revisit, and you need to engage with the various stakeholders, the ones that I mentioned, including the ERM. It's also one of the key drivers that we refer to when you prepare the audit plan, because you make sure that you don't miss out on any critical or key risk that each of these stakeholders, because then you get a 360-degree view. Because each stakeholder would look at it from a different perspective, from a different prism. So when you interact with different stakeholders, you get a 360-degree view, and then it becomes that much more easier when you sit in the audit committee to answer those questions, because you would have a lot of questions from the audit committee in terms of why don't you, because they sit on multiple boards, and they have a much better view in terms of the kind of risks that the organizations are battling with. So you would have a much better understanding as to why you have excluded certain areas from the audit plan of annual audit plan of the particular organization, and why you have included some. So you would have a very strong reasoning and justification, and that also gives them a lot of comfort that you've done your homework well. Use of technology. It again, so we will talk about it a little bit more detail. Now, what are the kind of tools and methodologies that you use when you perform your audits? Are you going to use certain tools? Are you well versed in use of those tools? How reliable are those tools? Do you have trained staff and people to be able to use those tools? All of this becomes extremely important. Resource allocation is something that we have just spoken about, in terms of whether you want to insource, outsource, whether you have trained people who have adequate expertise in that particular area or not. There are a lot of areas, which are highly complex, especially in the technology space, or even in the accounting, like derivatives. It's extremely complex. So you may or may not have the requisite skills within. Forex management is again, a highly technical area. So you might want to engage certain experts in reviewing how we manage those risks within the organization. Documentation is something that we have spoken about in terms of archiving and maintaining all the evidences, not only the evidences, the entire risk assessment process, your field work papers. Somebody will have to review the kind of work that you have done, what is the kind of an audit program that you have drawn up, whether that is adequate, whether it meets the audit objective itself or not. All of this will need to be looked at. Now, quickly jump to the next standard, which is 230, which is the objectives of an audit. Now, objectives, while you have detailed objectives, which are typically your safeguarding of assets, compliance to local laws, regulations, blah, 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 all of that is anyway there. Typically, what happens is that an intra-audit charter would have a repository of the expectations from the audit function. And it would also have a few things like, for example, related party. Now, how should you go about auditing a related party kind of a transaction, which may not be your standard objective of an audit, but then your charter would very clearly call out that I want an audit function to look at it and report whether they wanted you to cover every related party transaction, or they want you to report every quarter on sample tests. Everything would be very clearly defined in the audit charter, and that would be discussed and approved by the board, which is the audit committee. Next, of course, is at the engagement level. Now, this is the audit charter is broadly at the functional level, at the department level. The engagement letter will very clearly define the audit or the objective of an audit at the engagement level. So the engagement level will clearly tell you what is the assurance that you're going to provide to the various stakeholders. And please remember that when we talk of internal audit, we are focusing more on assurance side. Advisory is something which is an offshoot of an audit, which means when you come up with the recommendation, the recommendations would tell you how to reduce costs or how to improve efficiency, how to safeguard assets. That would be more an advisory thing, right? So within an audit, we are looking at only the assurance piece. Therefore, when you provide an assurance, you need to tell what is it that you're going to provide an assurance on. And that would tell you the engagement level objective, which should be very, very clearly called out. And your audit opinion should very clearly mention or should call out your findings or your opinion on each of those objectives that you're defining in the engagement letter. And you would have an overall opinion. So based on the individual objective findings, then you would have the overall opinion whether that report is the area that you audited, the nature of controls or effectiveness of controls is good, bad, ugly. The way the kind of ratings that you would typically, we use something like satisfactory, not satisfactory, except good, exceptional. So you can actually define and you have that as part of the methodology. Let's quickly jump on to the standard 240, use of work of an expert. As mentioned, you may not have all the skills in your function. What you do is that wherever you think that, because end of the day, you provide an assurance to whom? To the audit committee and to the management. And therefore, if you feel that, while you may have adequate knowledge, but you do not have the expertise in that area, you as an audit head would decide that, yes, I think there's a need for me to engage an expert. And you should not shy away from it. And as I mentioned earlier, when you do the audit plan, when you prepare the annual audit plan, you also budget for these expenses, that these are the audits in which I definitely need to engage an expert, and this will be the approximate cost. And so you should not shy away in engaging an expert in any of the work that you carry out. What is important is that you need to validate the credentials of the expert. You need to make sure that the expert that you're engaging truly has hands-on experience and you can place reliance on the work done by. So typically what we do, we take a lot of ref checks in terms of whether the individual worked, or or wherever we feel there's a need for us to engage a particular individual or a partner or an expert, we specifically call out and say that, I heard that this individual is really good in this area and I want to engage. So you make sure that, you engage the right person for the right job. Independence and objectivity is very, very important. Most times what happens in the consulting space, the same individual could have worked as a consulting partner in defining certain processes in the organization. You should not engage the same individual to perform an internal audit of that particular area of which he or she has defined the processes. There's the inherent independence issue there, conflict of interest. So you need to be extremely careful in terms of whether any work has been done within the organization for the area that you're planning to engage him or her. The qualifications and credentials is something that we just spoke about. This then comes what exactly you want that individual to look at. You need to be extremely clear about the scope and outcome of that particular review. Unless and until this has been very clearly defined, the individual would go all over the place. You need to be extremely, the scope should be very, very sharp and focused so that you would then get a quality report from that expert. Next comes, what is the kind of review mechanism, internal review mechanism that you would like to establish to make sure that the quality and reliability of the work of that SME is achieved? I'll give you a small example. See, what happens typically is that, when you engage an expert, you hand over him, you put him on an assignment, you pass on the requisite data and information. maybe the data is incomplete, or the understanding of that particular process, or the source of that information is incomplete or incorrect. And what happens is that if that has not been brought to the attention of the subject matter expert, he or she would continue to work on whatever inputs that he provided, and then you would get an end result, which is nothing but piece of junk. So it's extremely important that you have internal checks and balances to make sure that whatever has been fed to that SME is accurate, complete, and reliable, so that the output which comes out of it is also equally reliable. Because what happens is that once you present the report to the auditee and suddenly they say, oh, the data is incomplete, the data is incorrect, no, this has not been, the data has been pulled from a different source. You come across all kinds of arguments to defend the report. So I think to avoid it, it's extremely important you have the internal checks and balances. Next, we jump on to the 300 series. Now 200 series primarily talks about the annual planning process, how you want to manage the functional, the functional level, and at a much higher level. Now, 300 talks more at the engagement level or at the assignment level. Now, as a rule of thumb, wherever I manage the audit function, I make sure that at least 70 to 75% of the time is spent on the planning process. As a rule of thumb. As Nandaji rightly said at the beginning, the more you spend your time on the planning process, that greater will be the quality. And you would actually filter out all the potential problems right at the beginning itself. And then your execution, field work will become that much more easier. So let's look at what are the primary fundamental objectives. Your assignment again should be aligned with the initial audit plan, the broad scope that you're planned. I've seen a lot of times what happens at the engagement level, your initial scope is something, but then what happens, when you start working on the assignment, you come across a lot of these things in the sidelines, you get distracted, and then you forget what is your core objective, and then you move on and conduct audits on a lot of other things which have no relevance with your fundamental objective or the core objective of the assignments. It's extremely important that you stick to. You will have a lot of distractions. You have a lot of things that will interest you, that you feel, oh, I need to look into this, I need to audit this, this looks more riskier, or more important to me. But then I think you need to make sure that you always make a note of those and feed back to the head of internal audit or to your team lead, rather than getting distracted. And you should never ever forget your fundamental objective, which has been approved by and reviewed and approved by the audit committee, and make sure that your engagement stays within the boundaries of the overall objective of that initial audit plan, broad scope that we have defined as part of the annual audit plan. And then the scope, coverage, and methodology, it becomes extremely relevant. We spoke about it at the broad level, and the same thing applies at the engagement level. You need to be very, very clear about the scope and coverage. I just mentioned to you as to why it is so very important. Of course, the methodology, we comply to certain standards, and becomes much more easier for the reviewer to review, and then typically the organizations where I have put in the practice the assessment used to be 2 levels, one at the team level or the manager level, managing engagement, and one at the head of internal audit level. At 2 levels, the entire quality would happen, and then there is a very clearly defined format in which there are multiple parameters on which the engagement is being evaluated on an ongoing basis till the time we sign off on the final report. And the next one is resourcing, in terms of you also do the budgeting when you do the budget allocation in terms of how much time each engagement will take, to make sure that you stick to those budgets, and those budgets are sacrosanct. Whenever there is whenever you exceed the budgetary time or estimated times, you actually go back to the drawing board to see what were the reasons. Is there an understanding issue? Is there a scoping issue? Or did we have any other surprises? Or is it a support issue? And then you make sure that you fine tune it, so that when you perform the budgets for your next quarter or for the next year, you become that much more accurate. So this becomes extremely important. Most times, where we do not do that, which is very, very important in my view. And then skill, we also talked about it earlier, whether we have the skills. Again, that's something that has to be discussed between the head of internal audit and the manager who is going to head that engagement. Do we have adequate skills to be able to perform these tasks? Do we have people who can use the requisite technology, be it for analytics or for any other? Do we have the expertise within the team to perform these tasks? This comes up specifically in some very complex accounting audits, or in the technology space, because the technology again is highly niche. And while you may have a broad understanding, your team may have a broad understanding, but when it comes to the nuances of that particular area of technology, you still might feel that I think it's good to have the expert. But then when you engage an expert, you very, very clearly define what exactly you expect from that expert. What is the kind of a support that you're expecting from the individual? And what we have done as a process is that we always preferred a co-sourcing kind of an arrangement where you assign an internal team with the expert, so that the internal team automatically gets trained when the team works alongside the SME. Of course, this is what we have just talked about, that the audits are conducted in the most efficient and effective manner, which means that you complete the audit within the budgeted time, within the budgeted cost, and it's also effective. So either by use of technology or by engaging an SME. And this is something which is given, the last one, that we strictly follow the methodology or the framework that we have adopted. Now, it could be any of the framework, but the most recommended one is the Institute's recommended framework, which I feel is very, very exhaustive, and a lot of work has gone behind drafting these standards. Next, we quickly move on to standard 320, which is the evidence gathering. Now, evidences can be either, it could be documentary evidence, it could be visual evidence. So we use a lot of photographs, we use videographs, and we use inquiry. Inquiry is when you do a lot of discussions with the auditees. For example, you're doing an audit of, say, maker checker. To ask a question with the checker, what do you check? Is it very clearly documented as a checker, what is it that you need to check? What is it that you would check? Unless that is, most times when you ask this question, the checker is unable to respond. The fellow will say that, the first fellow signed, therefore I am also signing. And that's not what you're wanting to hear as an auditor. You want to know whether the individual who is given the role of a checker, does he really know what is he supposed to do? What is his role? And is he able to explain when you ask questions, right? It could be a bank reconciliation statement or any reconciliation statement, or approver. So when you approve, what is it that you look at before you even put your signature on the dotted line, or when you approve it on the machine? So I think you need to look at some of these. This is called as an inquiry, and then you document it. You document whatever is the response that you received. And you can send it as an email saying, this is what you explained and this is what I have understood. Now, please confirm if my understanding is correct. So that becomes your documentation or evidence itself. So, or voice recordings. We have used a lot of voice recordings. Of course, we do recordings with the permission of the individual saying, we want to use it for our reference purposes. Because most times what happens when the individual explains, when you're discussing, that there's a possibility that either you have not understood fully, or you have understood incorrectly, or you might have missed out a few things. So you say that, okay, if the individual permits, can I record? So you record it and keep it. So so that becomes legally, and you can use it as an evidence. So internal audit program is extremely important. We never touched upon the internal audit program. Before you start an audit engagement, you prepare the audit program based on the initial scope that you have identified as part of your annual audit plan. The program will have to very clearly call out what is the area that you're auditing, what are the controls that you're going to test, what are the number of samples that you pick, and then what are the nature of evidences that you will gather to assess those controls which have been defined in the process. And then you document as to what are the controls what are the evidences that you actually gathered, subsequent results. So this program the quality of the internal audit program will define the quality of success of the internal audit function. The greater the robustness of the internal audit program, greater will be the quality of the output that you would get. And this audit program will have to be very, very closely, minutely reviewed both by the audit manager and by the audit head. And this, most of the times, this becomes a one-time activity unless and until the processes have undergone a sea change. So once you do a particular area, you document this, you can more or less use this similar kind of an audit program. But this becomes extremely important because it will also identify what are the inherent risks of each process and how those risks are getting mitigated through the control activities. So I think this becomes extremely important. Quality of it is very important because this also will tell you where to focus and how much to focus. And is it really worthwhile focusing on certain areas, or whether it is better to focus on something which is more important, more critical to the audit engagement. The last thing is the evidence should speak for itself. You do not want a situation where there's no head or tail, there's no background, there's no reference, and suddenly something pops up, or you have it as part of your evidence in the documentary form. And then somebody will have to come and explain as to what that evidence means. So evidence should be self-explanatory, which means either you should have a very clearly described activity as to, okay, this is the background and this is the evidence, or there is a cross-reference with the audit program. Okay, this is the control that we are testing, and this is the evidence that we gathered to validate this particular control. Some kind of a reference, some kind of a background has to be there for each of the evidence that you gather. Otherwise, somebody will need to explain. And what happens, when there is an attrition, when the individuals change or some other team does the audit, that individual would never ever be able to understand. And you come across this majority of the times, because when you ask another team to perform the audit of that same area and to look at the audits done by the earlier team, more often than not, you will see that I don't understand few things because some are not clear, some are not. That's the failure of the reviewer who reviewed the audit engagement at the engagement level and also the audit head level. So I think this is something that need to be kept in mind to make sure that the audit head and the audit manager constantly review every piece of document that has been collected as an evidence, and they have been adequately cross-referenced. Quickly jump to 330. Now, this is again internal audit documentation. We spoke about the evidences. Documentation is all about cross-referencing with your internal audit program, and then work paper documentation and cross-referencing becomes extremely important, so that you can actually refer which your document is being used where and for what purpose is extremely important. And secondly, what is important in the documentation is that whatever were your initial audit objectives at the engagement level, you need to go back and comment and pass an opinion on each of those objectives, whether the objectives have been met or not met. Sorry, what I meant is that whether the test that you carried out has passed for each of those objectives or not. That need to be very clearly called out. And then you have the overall audit opinion for the entire area. So that becomes extremely important. Each of these documents will have to be, what should I say, should be put together in such a way that for every objective, you have these documents together, so that when the chief audit executive looks at a particular area, all the relevant documents are all in one place, duly referenced and archived. That becomes extremely important. As I mentioned, it helps in supervision review of the internal audit work, either by the subsequent teams or by the chief audit executive. Most times, it is the chief audit executive who want to perform quality assessment at periodic intervals. So when you pick up a particular engagement documentation, it should be able to speak for itself without calling for the team and asking for details and explanations. And then, of course, the point C is something which is constant thing. You should always have a well-documented methodology which the team completely understands and thoroughly understands and complies with it at all times. So in this case, we are referring to the pronouncements of the Institute of Chartered Accountants of India, which I feel is probably one of the best standards that have been put together for the internal audit function. Now, as I mentioned, the overall objective of preparing audit documentation is to allow the internal audit to form an overall opinion, which I mentioned, and that typically is carried out by the head of internal audit when he looks at the report, because the head of internal audit finally signs off on the report, and he or she will have to satisfy himself or herself that yes, I think the opinion is fair, and it is based on informed decision, and it is based on the evidences and the documents which have been put together by the audit team, so that you can defend. And at the same time, when you go for discussions with the auditee or with the management, you have the logical explanation for each of the opinions that you have come up with. 330 is again key requirements. We talked about audit working papers, which is typically the field work that you carry out, the risk assessment papers. And most times, what happens, you also might want to download certain documents from the web in terms of what are the key risks that pertain to this area globally. So maybe there are certain risks that I could be missing out. So could it be possible that there's something of nature of vulnerability or which has happened elsewhere that is not that you're not aware of. So you might want to perform certain research, and you might want to download even those documents. All of that will become part of your working papers. Sufficiency and completeness of documentation, as I mentioned, these should not only be reliable, but this should also be complete. You cannot have half the documents available and half of it is based on presumption. I've come across cases where the team members would say, I presume this is not happening and therefore I did not get the documentation. So presumptions are not permitted. Your individual opinions do not count when you form an opinion on an audit area or an audit engagement. So everything is backed by evidence and documentation. So you need to have complete documentation. Otherwise, you should call out very clearly that you could either not gather an evidence or you have not gathered the evidence. So that becomes extremely critical. Audit process manual is to ensure that you complied with the internal process that has been designed in performing an activity. Ownership and custody. So most times, you want to archive them digitally, because now that the technology has evolved, you would have digital copies either by way of scanned copies, or when you have the evidences in digital form, all you have to do is upload them and you logically name them, and then make sure that your backup process is robust and adequate to make sure that they are available at any point in time. You don't keep it in your local desktop or laptop, but it should be in a centralized location, ideally duly backed up as per the backup policy of the organization, so that they are available at any point in time for referencing. Standard 350. Review and supervision of audit assignments. I did touch upon this earlier, saying this is so very critical for the success of an engagement and for ensuring the quality of the audit assignment. Constant review is important, because your team may consist of freshers or people who have been working on that particular engagement, which could be a complex engagement for the first time. So they could be it's all judgmental. So most times what happens is that people come to judgments very, very quickly, and you might exclude an area from being audited or from being looked at. So you might want somebody to constantly review, question, challenge whatever is being, including the methodology and approach. Whether that's being followed is adequate, whether that is the right process, and you might want to challenge each other. So therefore, greater the review, the better would be the quality of the output, both at the managerial level and at the audit chief audit executive level. And typically, as a process, what I have done, I have the process or the methodology that I've defined is a 10-layered, 10-step or 10-layered kind of an approach. After every layer, it has to go through a very stringent quality review or an assessment, post which it moves to the second layer or to the second step. So that what happens, you do not complete the 10th step and suddenly you realize that, a lot of things were missing either in the first step or the fourth step, and you go back and forth all the time. So you save on time and ensure that you get it right the first time without multiple iterations. And that way you save on time, and it also will ensure quality. And what happens is that the team also will get adequately trained. They would not commit the same mistake the second time when working on a different engagement. So they also would learn live as you review it. Documentation, the date and signature of review undertaking becomes extremely important because what happens is that especially in the case of frauds, this becomes extremely important, because one of the questions which come up often is that how come the internal auditor missed identifying this particular issue? It's quite possible that the review that you carried out could be maybe in a different date. But then if you do not put these dates, it becomes extremely difficult to defend whenever you have situations like these. So in situations like these, so it's extremely important you document it very clearly in terms of when was this particular review carried out and when was this evidence collected and date of receiving. Because a lot of times what happens, the document itself could have undergone a change, or somebody could have changed the data in the backend. And these would happen in your Excel spreadsheet kind of reports. We have seen even in system generated reports where backend changes were made. We have come across a lot of combinations. So it's extremely important as to documenting as to who provided the data, when was this received, who received it. All of this becomes extremely critical so that you can always go back and check. So the professional judgment is again, extent of documentation is reviewed is based on the professional judgment of the reviewer. See, one of the things that I would advocate to all the internal professionals is that a lot of times we blindly go pull data, place reliance on the data that has been provided by the management or by the auditing. Please make sure that the data itself is reliable. We have seen multiple times that the data that is provided is not reliable. Either it is incomplete, it is not accurate, or from a different source. Before you start performing any work, I call paratrooping. Before you start performing any work on the information or data that you collect, make sure that data itself is reliable. So that becomes very, very critical, and that should never ever be neglected. One second. And that's where the word professional judgment, the professional judgment comes in terms of the reliability of the data that you have used and the documentation. Even documents, we have seen a number of times the documents have been doctored, including emails. Emails have been created. So make sure that whatever that you collect is reliable, be it the data, be it the document, be it the evidence, whatever evidence that you collect, whatever information that you collect is reliable and is accurate and complete. 360, communication with the management becomes extremely critical. A lot of management teams would have their own individual preferences and requirements. Some say that, please share with me the engagement letter, please share with me the scope, please share with me on an ongoing basis whatever are the emerging issues or observations which are cropping up. Even before you discuss with the auditee, I would like to be kept informed at all times. So some people would say, "Oh, I'm not interested. Send me only the summary report." And before you go in for a discussion, I would like to be informed that okay, these are the issues which are cropping up. So each or periodicity. So some would say that I would like to see all the audit reports. Send me the entire report. Some would say send me only the summary report. Somebody would say that okay, just before the audit committee, send me the audit committee deck. I am not interested in anything else. Or somebody would say that okay, discuss with me just before you walk into the audit committee. So each management, the management styles differ, and they would have their own specific requirements in terms of the periodicity, whether they would like the reports to be sent every month, every quarter, or just before the audit committee, a briefing. So I think you need to have a very clearly defined and documented communication requirement with the management to make sure that you make sure that they are kept informed at all times the way they want. before you walk into the audit committee. You should not surprise them that some things have not been discussed and brought to their attention before being discussed with the audit committee. And either this can be part of your audit manual, or this can be a separate a document which you should definitely maintain and should be communicated with all the team members. The other communication things is a lot of management teams would say that if you do not discuss with me directly, please discuss with me with the auditee or some one level below before you come to me. So, I mean, you will have all kinds of permutation combinations, and each individual's preferences are different. So make sure that you document it so that whenever you perform an audit of that particular area, you make sure that you comply with them. So written details of essential exchange of information. Yeah. So whatever communication, whatever, I mean, it all becomes your audit documentation or evidence, internal communication, whatever that you write to various members of the department or functions, either as part of your audit, as part of the auditee response, or as part of your queries. Make sure that all of that is part of your documentation. Any communication relating to the engagement or audit that you perform will become part and parcel of your documentation and the audit pack. Make sure that they're all kept together and duly referenced, so that you do not end up having incorrect documentation and keep looking for things at a later date, and it becomes extremely difficult, especially when newer teams start working on these audits. I did mention about this verbal communication, that wherever it's called inquiry. So whenever you have verbal communication, make sure that you follow it up with an email or any documented thing in writing, saying, this is what I have understood, is my understanding right? And this is what has been shared with me. In case if you do not receive a response, you send 1 or 2 reminders and then say that, okay, since I have not heard from you, I presume my understanding is correct, and you close it. Next is 370. Reporting the results. So initially, the standard practice, again, these methodologies keep differing based on the management style. Some would say that send me, as I said, on an ongoing basis, all the emerging issues. Or some would say that send me the draft report. Some would say that no, send me the draft report with my auditee responses. I want to see what is it that they have responded, and I would like to see what are the action plans that they've agreed to. Some would say, no, I would like to discuss the report, irrespective of the auditee responses, and I would like to provide my own responses. You will see all permutation combinations, and make sure that you understand each one's requirements quite well, and then make sure that you comply with it. And then subsequently, you will issue the final report along with the action plan, the agreed action plan, and the opinion that you have formed on the audit report. So that becomes extremely critical. Then the audit committee is far more interested in mitigating some of these, in complying with the action plans. And in case if they do not comply within the agreed timeline, most times they call out for the reasons and why they could not complete and what are the next timelines. So again, the audit committee, you also need to have a very clearly defined understanding with the audit committee also, in terms of how do they want the results to be shared with them. I've seen some audit committees want the entire report to be shared with them. They want the long report along with your analysis and all of that. Some want only the abridged report, which is the summary report. Some want only in PPT form. So again, the audit committee member requirements are completely different. The audit committee chair requirements are completely different. And some would say that, send me, share with me the findings or with the audit committee that are very, very significant. And they will, you need to understand what is that significance, what is significant in their terminology, whether it is in dollar terms, whether it is reputation, what is it that that they are expecting from the audit, from the Intra-Audit head. So it becomes extremely critical to have very clearly defined understanding, not only with the management but also with the audit companies, because they have their own requirements, so which could be completely different from what the management is expecting. So you need to also good to document it, not as part of your methodology, but definitely you should document it and then circulate it with your internal team members. No audit report shall be issued in final form unless a written draft on the report has been previously shared with the auditee, which is what is the standard practice. Nothing is verbal, everything has been, and also the auditee responses will have to be in writing. And in case if it is not, if it is verbal, then you follow it up with a written confirmation that this is what has been explained and this is what you have documented, and before you circulate the final report. So, and as part of the methodology, you can also define what is the period within which you issue the final report. And typically, it is about 4 days or week from the date of receiving your final draft with the auditing replies that you have discussed with the management. So that's how you typically close the report. Monitoring and reporting. This again is mostly the post-audit activity. So, as I said earlier, that most of the audit companies are far more interested in knowing the level of interest shown by the management in putting together the mitigation plan or putting together the agreed action plans within the agreed timelines. And wherever there are defaults, typically they would call for the departmental head and seek explanation as to why it's not agreed. And typically, when certain actions are not getting implemented, it will be two reasons. One, the management team, or tenable. I mean, it's theoretical, it is not practical, or it has outlived its utility. Some of this could have happened. So you need to go back to the drawing board to understand exactly and probably engage with the management to understand as to why a certain agreed recommendation has not been implemented. And you might want to come back and communicate to the audit committee to say that whatever is the factual position, and which gives them the comfort. And wherever they have the management, due to certain genuine constraints, have issued a revised timeline, go back and communicate to the audit committee that these are the constraints, and you have validated. And one of the things that we typically do, or what I have done in my career, is that whenever you publish the compliance report to the audit committee, that okay, these are the actions which have been agreed, which have been mitigated or implemented within the agreed timelines, I always go back and do a test to see that whether these have actually been implemented or not. Because what happens is that what the audit company doesn't appreciate is repeat observations. You have reported a particular finding maybe 2 quarters ago, and then the management said that they fixed the problem, and then you come up with the same issue again. That means that either it is a cosmetic fix, or it has not been properly mitigated, or it's a quick fix kind of a thing. So I think you need to make sure it is permanent, and before you provide an assurance to the audit company, because the audit company is placing reliance on the Intra-Audit head. You need to, before it becomes our responsibility, to make sure that you perform all the checks and balances before you provide that assurance to the audit company. Document evidence to support audit procedure for prior issues. So, which means the compliance audit that I just spoke about to gather evidence exactly to know that the agreed action plans have been actually fixed and mitigated before you communicate to the audit committee and to the management as well. So you do not find the fixes are not happening on time, you either escalate it itself has become locked and mitigated before auditors not have on a change, or they have automated changes and then action taken or ATRs as they are called. This is that you present. Is it better now? Hello? Hello? Yeah, I'm doing it from the laptop itself. Pretty much I'm at the end of the session now. I think this is the last slide.
It's better, sir. It's better now.
Okay. So action taken report is something you present it along with the your audit pack to the audit committee, and you give them both the qualitative and quantitative updates, qualitative and quantitative, in the sense that high risk, how many high risks. See, most times what happens, if you have 100 items to be mitigated, now all 100 may not be critical. So when you say that 20 of them are high risk and 60 are medium, and maybe the low risk are 20, or maybe, so let's say 60 are low risk and 20 are high and medium. So they might end up closing all the 60, which shows a very healthy closure report, but then they have not mitigated high risk and the medium risk, which are far more critical from the organization perspective. So I think that's what is the qualitative thing. Qualitatively, are they really focusing on the key ones? The audit company is not so much worried about some low risk issues taking time. But then definitely they are far more concerned when high and medium rated risks are not getting mitigated within the given agreed timelines. So I think qualitative and quantitative becomes equally important when you present the action taken report to the audit committee and as well to the management. So management also would get equally concerned, especially at different divisions or different geographies, when certain things are not getting implemented or moved, mostly on the compliance side, they get deeply worried. So within the given timeline, due to paucity of time, I had to really rush through. I hope you found the presentation useful, but I'll be extremely happy to take questions, and either now or subsequently, if you can email to me, I'll make sure that I respond to you each of your questions. And thank you.
So
so
we'll
much
have it at the end, the question and answer session.
Yeah, thank you so much for the opportunity. Thank you, Nandaji. Thank you, ICA, for this opportunity. Thanks once again.
Thank you, sir. That was truly an enriching presentation. And I'm sure our participants would have gained greater insights into the topic after the deliberation. Thank you. So moving on to the second session for the day, the session is on standards on key concepts 100 series, and it will be taken up by CA Sharat Acharya. CA Sharat is a qualified chartered accountant with more than 11 years of experience in the domain of internal audits, risk assessment, development of enterprise risk management, process improvement, internal control evaluation, SOX readiness, and development of standard operating procedures. Mr. Sharat has significant experience in providing internal audit, business process improvement, internal control evaluation services to various sectors such as metals, mining, power and utility, consumer product, FMCG, etc. He has also worked on international assignments and has been a part of overseas teams in Saudi Arabia, UAE, South Africa, Malaysia, Bahrain, etc. I welcome you, Sharatji, for your deliberation. Please go forward with it.
I'm extremely sorry. Yeah, hello everyone, and very good evening to everyone. And thank you, Rohan, for giving this detailed introduction of mine. I'd just like to reiterate, I'm a chartered accountant, and I have 11 years of experience in the domain of internal audit, in the domain of standard operating procedures, risk assessment, evaluation of internal controls, and this is the key area which I have worked in since 11 years, and I'm a member of ICI. And I would like to thank to give me this opportunity to express my views and take this session. So with not wasting much of a time, I will take you through the session. I'll just share my screen to present you. Let me know if my screen is visible.
Yes.
Yeah. So basically, I'm today here to take the sessions on the two of the standards of standards on internal audit. Basically, which is one is the nature of assurance, and another is on the internal controls. So basically, why this is required. The ICI has regulated this requirement because of the changing need of internal audit. So there is an expectations from the governance mechanism, from the visual regulators, from the government, from the shareholders, that there should be governance at the listed companies where the shareholder money is involved. And from the past 10-15 years, if you have seen that the regulations has become so stringent, and with the implementation section of the Companies Act, there has been more vigilant regulations, and the LODR compliances, which has come recently in the last few years, the requirement of internal audit and the role of internal audit has changed significantly. I will take you through how the role has changed. So if you can see, there is in respect to the Companies Act 1956, we can see that there was no requirement of reporting with respect to the internal controls by the board of directors or the audit committee or the independent directors of the company. And also the statutory auditors were not required to represent anything with respect to the internal controls, except with respect to the fixed assets or the controls over inventory and for the sale of goods in their CARO report. But now with the advent of the Companies Act 2013 and the company's rules, we can see that the responsibility of the board of directors has changed significantly, and the Companies Act and the rules has laid down that there should be an internal financial controls that should be placed by the board of directors, and there should be assessment of the adequacy of such operating effectiveness of such internal financial controls that has been placed by the entity and the board of directors. Further, the Companies Act also requires the board of directors to report or to state in their report the adequacy of internal controls, which needs to be complied on annual basis when they have published a final annual report on the books. Also, the Companies Act also requires, in terms of the audit committee, to report on the evaluation of the internal financial controls and risk management system that has been part of the entity. Further, the audit committee is also required to call for the ask the internal auditors on comment on the what was the scope of the internal audit and how these observations and things have affected the financial statement. So considering this, there has been a considerable impact with respect to the governance mechanism of the entity for not only for the purpose of with respect to the executive directors, but also for the independent directors who are part of the audit committee. Apart from this, there has also been placed a significant importance for the statutory auditors who are required to comment on the adequacy of the financial controls and the operating effectiveness of such controls in the company in their internal audit, in their statutory audit report. Further, the independent directors also are required to identify the integrity of the financial state information that has been placed in the annual reports, and they has to have to be defensible about the risk management strategy and risk management process that has been placed by the entity. So this is this you can see that there is a robust compliance requirement that has been placed by the Companies Act. Further, if you can see, in respect to the internal audit, what has the role of the internal auditor has changed. So with respect to the class of companies, if you see, every listed companies needs to appoint internal auditors, and every unlisted company who are having the share capital of 50 crores or more or income of 200 crore or more has to appoint the internal auditors. Also, there has been placed the requirement with respect to the private companies wherein if the income is more than 200 crores and investment or outstanding borrowings which is more than 100 crores with respect from the public and financial institution, they are also required to appoint the internal auditors with respect to annual assessment of their internal controls. So these are the requirements which has come up with respect to the management of the company, audit committee, statutory auditors, as well as internal auditors. Now, how this standard affects this mechanism and governance. As a part of internal audit field and domain, we are required to follow these standards with respect to the to manage the profession, and hence it is required as per the standards on internal. Just give me a second. Yeah, so for purpose of the standards on internal audit, there is a minimum requirement for every members of the ICI that they are required to perform the internal audit with respect to the minimum requirements which is laid down in the standards on internal audit. So this is not only applicable on the members of the ICI, but also for the accountants who are appointed as internal auditors, but this excludes some kind of work which is not required in terms of the assurance activities or are the advisory works. So those are not required to follow these SIA standards on internal audit, but every member and the person who are appointed as internal auditor has to follow these standards. So the first being the nature of assurance. So nature of assurance is basically it talks about the internal audit assurance assignments, like in terms of how an assurance the internal audit department can give an assurance or the confidence to the assurance user. Say, for example, the internal auditor's responsibility lies with the entity and the assurance user, who is basically the audit committee or the board or the shareholders, who rely on the internal auditors of the entity to for the evaluation of the subject matter, and they depend on the internal auditor's report for their opinion which is being formed. So as a part of it, the internal auditor's report becomes a evidence piece of work for evaluation of the internal controls of the organization, and has to be followed diligently with respect to the profession. So the nature of assurance, the standard 110 is totally all about the internal auditor responsibility overall on giving the assurance activity. Now these are basically there are some exclusions with respect to the assurance activities, wherein in case of 4, as you can see on the screen, there are 4 cases wherein these exclusions, these assurance assignments are not required to report. First being the assurance where only a summary of observations along with the recommendation of internal auditor is presented, which is not an internal auditor report, and the assignments which are covered by the standards issued by the ICI. Further, any regulatory or compliance reports which is required to be reported as a compliance report to the governing authority or any board is not covered under this assurance. And also the consulting or the advisory assignments, which are not specifically the assurance engagements, are excluded from this nature of assurance. So what is the purpose, like why we are talking about this standard, why it is mandatory? So the first being the main objective being to identify whether the internal auditor can provide an assurance. So overall objective of this assurance of this standard is that to assess whether the internal auditor is able to provide an assurance, and he has the ability to perform the internal audit of the company or the entity. And secondly, then it places an essential requirements, like what are the key mandates that the internal auditor is required to follow, that must be satisfied in order to able to to provide that assurance. So if those standards are not followed, or those minimum requirements are not followed, there cannot be placed the reliance on these assurance report, and then it will not be taken seriously. Then the nature of assurance, how the nature of this assurance can be identified, like whether it is a reasonable assurance or is a limited to kind of a review, has to be is defined as per this objective. Now moving to the next part, which is on terms of the assurance, the components which it covers. So basically the components which it covers there are 3 components which is required to be covered as per the assurance assignments. The first being the 3-party relationship. So the essential of internal audit, that there should be a 3-party relationship, one being the internal auditor, another being the auditee, and the assurance user. So as we all know, as a part of the internal audit fraternity, that the internal auditor is the key person who conducts the audit, and the auditee is the person who's the process owner and who's the responsible person who's giving the task, and the assurance user is basically the board or the audit committee who's the user of that report. Then there's the second element, is the presence of the 3 key elements, which is basically a subject matter, and for which which is being getting audited, and the predefined criteria, that's the criteria which is available for for defining and reviewing the process. And then the third one being the conclusive outcome. So there should be a conclusive outcome based on the subject matter review. And the third aspect of this component of assurance assignment is the assurance report. So an assurance report has to be placed when an audit is conducted and concluded with detailed findings and outcome of the report, and identifying what is the risk of that particular process and the subject matter. So as I also already explained, if you see the three-party relationship, what does it stand for? So the 3-party relationship, that there are 3 parties should be there as a part of this internal audit. The one being definitely the internal auditor who is going to conduct the internal audit, and the audit is definitely being the process owner, the representative who's a subject who's responsible for the subject matter, basically who's the responsible for that particular process owner. And the third being the assurance user, definitely the audit committee or the board of directors to whom the audit report is presented. Now the third, moving to the next part, that is the three key elements. I think I've already explained the subject matter and the predefined criteria and conclusive outcome. So their subject matter is basically nothing but the scope of the activity. Say for example, if you can give an example there in terms of process, the procurement process or the inventory management process or the sales and marketing process. So these are basically forms part of the subject matter. What is the essential process which is getting reviewed? Even if it is a concurrent audit, that has to be looked into that perspective. Further, apart from this, there is a predefined criteria. So in order to have to write down an internal audit report or give an assurance, there should be a benchmark available, or the SOP or policies and procedures should be available, which represents the the subject matter, the requirement of which is defined in the entities, policies and procedures. Say for example, there could be entry level controls, there can be the articles of association and governance mechanism that is placed by the board of directors. Further, the last being the conclusive outcome. So the completion of the audit activities has to be followed with a position to deliver an outcome. If the outcome cannot be delivered, the audit cannot be conclusive, and the standards will not be in that nature. So in order to comply with the nature, the internal audit report has to give the conclusive outcome. Now, the assurance report, as you also understand, there is another standards on it, which is reporting results and the issuing assurance reports. For that details, we can talk about in that particular area. But for this limited assurance, the standards, up till this we can cover. Moving to the part of the next standard, which is 120 on internal controls. So taking you through the internal controls. So what is an internal control? The entity wherever who's working is followed by, or is being surrounded by a lot many risks. So with this risk, basically takes the entity, as a potential to act as a threat, and which can prohibit the entity's growth, or can limit the entity's performance. So in order to mitigate those risks, the internal controls are placed by the entity, and in order to strengthen the systems and processes of the entity to identify or detect or prevent any fraud, the internal controls are required to be mitigated. So basically, in simple language, the internal controls are nothing but the risk mitigation steps which are taken to mitigate the risks of the entity, and can be defined as manual controls that can be placed by the entity, or the automated controls that are placed by the entity. Further to this, what is the objective of this internal control? So the objective of this standards on internal audit, that is on internal controls, is to identify and clarify the responsibilities of management and auditors on how this internal control has to be assessed, evaluated, reported, and provide an independent assurance over internal controls. So these standard does nothing but the identify and clarifies the responsibilities of the management and the internal auditors and the statutory auditors to clarify on what grounds the responsibility lies. So moving to the next slide. So I'll take you through what are the types of controls. But before we understand the internal controls, we need to understand what are the exposure. Or exposure is nothing but a risk. So entities, as I said, is surrounded by several risks. So there can be different kind of risk associated with the entity, and we can also call them an exposure. So if you see, the most priority and the most important is being the entity exposure. So entity exposure is nothing but the macro level risk which is faced by the entity in terms of the government policies, the environmental regulations, the environmental pollutions, or the business or the competitors market or technology. So these are the basically entity exposure which can impact the business. Then there could be the other process levels and other level exposures, being the financial exposure or the process exposure. Financial exposure being which has a direct impact on the entity's financial results and internal the financials of the company, and which can affect the entity's performance financially. The third being the process exposure. Process exposure is are the process level problems which basically in terms of the processes followed by the entity. Say for example, the entity is following the purchase process or the sales process. So in case of purchase process, there can be issues like the invoices could be duplicated, or invoices are getting booked at incorrect amount, or the material is not coming and getting booked, or the quality of the material is not coming. So there can be different process level exposures or risks which are faced by the entity, and in order to mitigate we need such controls. And the next being the operational exposures. So process and exposure, operational exposure, there is a thin line of difference. Operational exposures are those exposure which is basically to the entity's operation in terms of how the entity is manufacturing, or doing the tasks which are not financially affecting but operationally affecting the entity's efficiency and effectiveness of the work. And the last being the system or excess exposure, which is being the technology driven. So for in traditionally we used to do the activities on manual tasks, where the manual books of accounts were used to maintain. But with the advent of technology, we are surrounded by the IT threats, which could be the exposure to the cyber security risks, or the risk related to the entities fraud controls, which people can manipulate through changes in the systems and processes and IT technology. So these are the types of exposure which is faced by the entity. In order to mitigate these exposures, there are several internal controls, like basically we can say 5 kind of controls that can be placed at different levels to mitigate this risk. So definitely first, for being the entity exposure, the entity level control needs to be placed. Now entity level controls are nothing but the controls with respect to the entity's governance mechanism, which governs the which identifies what are the governance level controls that needs to be there in place, so that the risk is mitigated. One of the key example could be having a standard operating procedure, or the policy of the company, or the defining a delegation of authority, or the code of conduct. So these are the basically the entity level controls that are defined by the entity to provide the overall governance structure in the organization, and hence it can mitigate those entity level exposure risks. Now, the second level of controls that can be placed on financial exposure are the internal control over financial reporting. So ICFR, which is internal control over financial reporting, is a subset of internal financial control, which controls are directly affect the financial operations of the entity and have a direct impact on the entity's financials and financial reports. So these are the key controls that needs to be placed to prevent any kind of fraudulent or any kind of exposure to risk, wherein the control lapse could result in a financial mishap. Then the process for and operational controls, these are basically similar in some kind of nature, but there are somewhat different in terms of how these are being mitigated. So process level controls basically are the controls which are laid down at processes. So this could be the work steps, or the details of the standard operating procedures, which identify what are the key controls on the process level that needs to be there, and operational controls, that is the work steps that needs to be there to mitigate any kind of exposure in terms of operational activity, or any kind of say for example, there could be risk of fire, or there could be risk of human health and safety or environment because of exposures to some kind of hazardous material. So those operational and process controls are placed with the help of basically your the material safety data sheet, or the putting on the environmental norms, or having the strict safety reviews. So these are some kind of control that can be placed. Now, moving to the next part, that is the system and access exposure, which is for the IT general controls. So IT general controls are information technology and general controls that are placed to identify any control deficiency with respect to the IT system. Say, for example, any kind of segregation of duty where a single task can be manipulated or done by two different tasks are being done by the same person, or the system related configuration controls in the system which is being used for maintaining the books of accounts are can be manipulated or can be used to make any fraud or errors. So in order to mitigate those internal controls, like with respect to segregation of duties or configuration controls, in order to maintain that dignity of the systems and processes, these controls are placed. With respect to the type of controls to place in this domain, there can be 5 type of controls. First one, the obvious being the manual control, which is basically nothing but a person dependent control wherein a person or a employee of the company works and identify what is the process is there, and he places a control over it to mitigate any kind of error or omission or any kind of fraud. Other than this, there can be a preventive control and a detective control. So a preventive control and detective controls are two different angles of a coin. In case of preventive control, a system or a process-based control is placed wherein the preventive mechanism and preventive checks and balances are provided. A maker-checker process is placed so as to prevent any kind of exposure or any kind of a problem in the organization. Now, a detective is another sort of control wherein it gets detected by the organization, or it gets detected by the system itself and identified and taken care of in the later part. So detective controls are basically a post facto thing which generally should be avoided, but in some cases when the preventive controls is not there or preventive controls cannot be placed, then entity needs to place a detective control. The next being the automated control. Automated controls are nothing but the system-based preventive controls which are placed by the systems and automated by the system so that manual interventions are not there. So automated controls tend to place restrictions. Say, for example, when you put a password in the system, so it can be of a 10-digit length or a 12-digit length, or can be having an alphabet or a numerical key. So those are kind of an automated controls which restrict any kind of an activity and restrict any kind of a loophole in the system. Now, fraud control is another kind of a control which is a part of all manual controls or preventive controls or automated controls, but its requirement is placed to prevent any kind of a fraud. Now, fraud control, a typical fraud control can be a segregation of duty wherein one person is doing two different types of tasks, like there is a conflict of duty. So their fraud control needs to be placed there with respect to segregating that duty to different person. One possible example could be with respect to processing of good receipt and processing of invoices and processing of payment. So if these three controls are lying with one and the same person in the organization, he or she can do a fraud which needs to be prevented. Hence, the segregation of duty or the conflict of duty of roles and change of roles and duties requirement comes in, and that has to be placed to prevent that kind of a fraud. So these were all on controls part. Now, the standards on internal control also identifies the responsibility basically with respect to the internal auditors. But when we come and across, we discuss the internal auditors responsibility. Let's first discuss what is the responsibility of the board and the management. Like I also explained before, like what is the requirement placed by the Companies Act with respect to the management of the company and the statutory auditors. I would like to reiterate that again, that in respect to the Companies Act, the board of directors is required to place an overall overall control of basically internal financial control that has to be placed in order to identify any kind of adequacy or inadequacy of the operating effectiveness. So the directors or the board of directors has to place or lay down the internal financial controls in the company, which will or which may affect the entity's operations, and hence it has to be evaluated annually by the different auditors, or by the different consultant, or by the organization itself, by making a check on whether these controls which are placed by the board of directors are working as adequate and are operating effectively. Secondly, with respect to the Rule 8 of the company's account rules, it also places a requirement of the details that the board of directors should need to report on the adequacy of the internal controls. So whether the internal controls are adequate or not, that has to be reported by the board of directors. Also, with respect to the SEBI listing obligation requirement, which is LODR compliance, which is basically a new regulation which has come in 2015. This regulation also requires the listed companies that compliance certificate has to be signed by the CEO as well as the CEO of the organization with respect to the their responsibilities on the internal controls over financial reporting. So these basically controls, these are already existing in the SOX requirements internationally, but with respect to the India, these controls has been implemented recently in 2015 by the advent of the LODR, listing of obligation and disclosure requirements. Another requirement of the Companies Act is basically, we have already discussed this, with respect to the operating effectiveness of such controls. So apart from the board of directors responsibility and the CEO CFO responsibility on the internal controls, the statutory auditors are also required to report whether they have whether the company has adequate internal financial control system in place, or the operating effectiveness of such internal controls are whether the internal controls are operating effectively or not. So these has to be reported by the statutory auditors. Now let's move to the next part, which is basically the responsibility of the internal auditor. Now this SIA defined the standards on internal audit 230 defines on the objectives of the internal audit. So this objective of the internal audit is to include the internal controls as a part of their scope and approach, and have to comment on the internal control effectiveness. Also, the internal auditors derive their responsibility or their mandate from the audit committee, which is a part of the governance process of the company, and the governance mechanism and the internal auditor's appointment is directly regulated by the audit committee, and hence the objective of the internal audit is to also to comment on internal controls. So as a part of the, if you see Companies Act covering the LODR requirements, internal auditors are also expected to comment on the internal auditors, has to make an internal control as a part of their scope and approach. Further, to do this, the internal auditors, as by the definition, has to identify or has to ensure that whether the designed and implemented and the maintained controls are operating effectively or efficiently or not. As a part of definition of the internal audit, you can see that there has to they have to basically comment on whether they are the designing and implementation and the maintenance of the controls are whether effective or efficient. The last part being nothing with respect to the review of risk assessment exercise, wherein the auditor shall also required to do a risk assessment exercise and has to undertake into the planning of the audit engagement, and also has to evaluate whether the adequate and operative internal controls are in place or not. And with respect to the internal auditors, where the internal auditor is required to provide an independent opinion over the presence, design, operative effectiveness over internal control, this shall be consistent with requirement to the nature of assurance, which we have discussed in the first part, which is the our standards on internal audit 110. So basically, these two were the standards which we wanted to discuss today. I think this is now we have completed as part of the this standards on the governance mechanism, and I would like to thank you for giving me this opportunity to take this session. And if anybody have any question, I'm happy to answer.
Yes, Sharadji, we have some questions.
Yes, please.
So one question is there any independent agency to certify the capability level of the internal audit function, similar to ISO certification or any credit rating?
Sorry,
Uh,
sorry, missed your part.
okay, I'll repeat the question. Is there any independent agency to certify the capability level of the internal audit function, similar to ISO certification?
At present, there is no agency in India which does this activity to identify any kind of certification for internal audit. But I think internationally there could be one, but if in India presently there is no such requirement.
There are firms which, not a certification, but they do an assessment in terms of
Performance.
kind of best practices that the audit function has adopted. Like example, what is the kind of budgeting process? What is the kind of training process you have? Whether you have a detailed skill assessment mechanism, a very well-defined charter and a methodology, whether it meets at least a certain requirement of internal auditors, professional practices framework, PPF, or there are accredited firms which do a quality assessment. Typically, as part of the charter, they say that you should get it done once every 4 years. So you can get, there are firms on which gives you the certificate. So, typically they recommend that we should go through that assessment once every 4 years, or we can go through a peer assessment also. So, which is not that you get a certificate, but somebody would come and do an assessment in terms of the kind of skills and competencies do you have the kind of audit planning process that you have, the kind of engagement execution process that you have, the use of technology, trainings and other things that I've mentioned. Yes, there are various parameters that they use, and they do issue a report, and typically the audit committees do ask for this once a while to see that where are we, where is the function in terms of their maturity level, and where should we move? What is the level of maturity that we, as part of the maturity graph, where should we be?
Right. So there's also a maturity assessment which is being done for the internal audit process, like how the internal audit functions is operating, and what is the overall performance and maturity of the internal audit function, how it is placed with respect to the identification of the problems with the entity, and how the best practices, how much best practices are there. So there's definitely these assessment is being done by the independent professional firms also. But I think there's a certification, there is no such body, right?
Yeah, so quality assessment, you get a certificate. There are international bodies, and there are bodies in India also which have got the licenses. So they do an assessment, quality assessment. So you also have the quality assessment framework, which has been issued by the Institute of Internal Auditors. So there are multiple parameters, pretty much the same thing, in terms of the budget allocation, all of that, the team, the composition of the team, the qualification of the team, experience of the team, then the trainings, then the skill assessment, what is the kind of a competency assessment mechanism that you have within the function, what are the parameters on which we have done that, at various organizations that I have worked. We prepared a competency assessment framework where we have identified various parameters. So whether you have that, then your audit planning process, both at the engagement level and at the annual audit planning process level, budgetary allocation, whether you have adequate resources to be able to perform your duties. Then comes your documentation. They will pick up certain audits randomly and perform a quality assessment to see that whatever that has been defined in the methodology, whether they have been duly complied with or not. So they would also look at your qualitative parameters in terms of the checks and balances that you have, the review mechanism, the kind of issues that you identify. So all of that get assessed. And that report is placed before the audit committee.
Yes, definitely.
Thank you for your replies. We have some questions for Sharma sir. Okay, another one is, Is there any tool or software freely available for controlled self-assessment?
There are tools available for controlled self-assessment, but every organization will have to assess it, because see, typically these are custom made. Because what are the controls? First of all, you need to have a very clearly defined process in place, and then you also should have very well-defined risk and control matrices, and then what is it that you now want to assess? Whether you want to look at only key controls, whether you want to look at all the controls, what are the controls that you want to assess? And then the nature of evidences that you would gather would be different for every organization. But broad tools are available. Populating those tools with the requisite data points is the key. If those are available already, it becomes much more easier. But otherwise, I think these tools are off-the-shelf kind of tools are all available. They are not very expensive also. These are all available, and these can be homegrown also. They are not very complex to develop.
Going forward
These tools
with the next
really,
question.
you can directly upload your evidences also. So, whosoever is assessing, they do not have to come back and look at your physical documents. Somebody can scan it and upload these evidences. So that becomes that much more easier. They get archived. Yeah. And that can be used by both the internal auditors and the SAT auditors also as part of their work performance. Please reliance.
Sir, can you turn off your video because your bandwidth is low?
Okay.
I think now it would be better.
Sure. Yeah.
So another question is, what happens when even the top management does not agree with the draft auditor's report and insists to drop the audit paras?
This is, I would say, a ghar ghar ki kahani. So I think it would happen everywhere. See, the reason is, see, a lot of, to be very honest with you, I think the CEOs today have taken up the roles of chief operating officers. So they have taken up the operational role. The CEO typically, at least in the Indian context, should be more like a visionary who provides a direction to the organization, and who should be independent and should be able to address some of the issues brought up by the audit teams or the audit function. But then you always have these conflicts because nobody wants to share the bad news. So, and that's the reason, you need to have those documentation. Quality of documentation becomes very important, so that you can have a very objective kind of a discussion with the management rather than being subjective. The more you move towards subjective and judgmental kind of reporting, then you have a lot of conflicts arising. Because, for example, opinion. How did you come to this opinion? What is the basis of you drawing an opinion? So at least to some extent, I think it should be objective. Not because how you feel it, but because it should be backed with some concrete evidence with which you can place your argument, saying, this is the reason why I feel. Most times, the argument will be on the sample size. Whether the sample that you chose truly represents the entire population. You picked up only 5%, whereas you have not even looked at the other 95%. How do you know the rest of the 95% is accurate? So these are the kind of arguments that would come up. The other typical argument which comes up is that if the company is not doing well, how come we are making profits? How can we are making money? How we are growing? And so you will have all these kinds of arguments. But then I think if you can stick to your audit objective and back it up with quality documentation, I think you will be able to see. And as a practice, what we have done is that we always inform the audit committee that wherever there are disagreements, we place it before the committee for the committee to take the call. So we say that, okay, this is our this is our opinion. The management might feel otherwise, but we place both the versions in front of the audit committee and say that these are the reasons because of which we feel this is inadequate, or this is how we have framed our opinion. But what the management side of the thing is, let the audit committee draw its conclusion. At least what happens is that you have reported what you need to report, because God forbid something happens in that space and you have not reported or brought it to the attention of the audit committee, then you are in trouble.
Recording in progress.
All right. So we have one more question regarding the nature of standards, whether they are mandatory as of now.
Yeah. So, sir, would you like to answer, or should I?
No, I think you can go ahead. I think they are not mandatory as of date. So whenever the institute proclaims the date, and from that date it becomes effective. I think today we are in the process of socializing across industries, across various bodies, because we want even the government institutions and organizations to adopt these standards and make it mandatory. And not only mandatory, because we also want them to be subjected to audit and review, so that the compliance is ensured. Otherwise, you would only have paper compliance. So I think that's where we want to take these standards to. But as we speak, they are not mandatory, but they would become mandatory from the date the institute proclaims them to be mandatory.
All right, sir. Thank you for your replies. They were indeed very informative, and I'm sure our participants would have received great answers for their questions. So we have reached the conclusion of today's knowledge enriching seminar. I would like to thank our dignitaries, Mr. VGVS Sharma ji and Mr. Sharad Acharya ji, for their valuable contribution to this cause of professional development and education. This initiative by the IASB is truly laudable, and I hope that we continue this camaraderie in the future as well.
Thank you. Thank you so much. We thank both CA and Nandaji for the opportunity. And feel free to share if there are any further questions. I'll be more than happy to respond to them. You can share it either on my WhatsApp number or.
Rohanji, our vice chairman has also joined.
Yes.
Yes.
I can see that Gyan Chand Mishra ji has also just joined us. Thank you, sir. Thank you. I can see that you are traveling and you have a busy schedule. Thank you for joining us today. Sir, would you like to say a few words?
Yes, thank you, Rohan. Good evening, all the respected dignitaries for their kind and valued time for this program. Moderator CA Rohan Mehrotra ji, and of course, both the learned and distinguished speaker who have deliberated on today's topic, CA Sharad Acharya ji and Sri VGVS Sharma ji, on the very important topic of today's webinar, standards on internal audit, keeping pace with reforms. Friends, at the outset, I'm thankful that the officers of internal audit standard boards are working day and night to give the best to the professionals at large and profession as well. We all know that the change pace is very important as of now, and the type of challenges the profession is facing. This is need of our that we have to keep ourselves updated, and we have to as well develop our skills and knowledge to tune up with the challenges that are being faced by the profession. I'm sure that these type of topics are certainly going to make the professionals more compatible in the internal audit environment. And standards specifically, if I discuss, I will surely say that these are going to be backbone for the internal audit procedures and systems in coming time. Internal audit has been always an integral part for the managerial discussions, deliberations, and their decision making. And Internal Audit Standard Board of the Institute of Chartered Accountants of India has always tried to make the things which are contemporary for the professionals at large, and always try to have the skill development of the professionals in order to get them more sustainable with the internal audit issues, factors, controls, and all those things which are required to go ahead to strengthen the knowledge base of the professionals. I'm thankful to both the learned speakers and of course to the moderator Rohan Bhai, and I'm sure that the board will keep on doing more and more better work in the interest of the profession. So over to Rohan ji, and thanks each and everyone for joining and giving this valuable input. to all the members of the profession. Thank you.
Thank you, sir, for your valuable words. So, friends, we have come to the conclusion of today's webinar on internal audit standards. I would like to thank our faculty, Mr. Sharad Acharya ji, BGBS Sharma ji, and all the participants who have been patient enough to have a great learning experience with us. My special thanks to CA Gyan Chand Mishra ji, who made time out of his busy schedule and joined us and said a few words of inspiration. Thank you. Thanks a lot.